So, ladies and gentlemen, I want to welcome you to this debrief of the mock here at Abacus Business School. My name is George Martin Mutumba, and I'll be taking you through this debrief. The purpose of this session is to specifically handle question one, what is usually the 50 marker in your exam. That is the P16 audit practice of CPA. I'll be taking you through the key issues you need to look out for, and also what is expected of you by your examiner. Please note that it's not a must that your question one must have a question on risks. And from experience and from what we see, usually your question one actually has usually will test you on audit planning, and specifically your examiner will also be interested in testing you either on business risks. Sometimes the examiner will test you on audit risks, and sometimes your examiner will test you on risks of material misstatements. Many students usually don't do well in this question and end up getting scoring very low marks in this exam. Remember that traditionally, the audit practice paper has always registered quite a number of students. You find that the student numbers are always big, but the pass rates remain very low. So in this session, I'll keep it very, very short, but I'll make sure that I tackle the key areas as to why students don't do very well, especially in question one. So let's go. So this is the test that we gave here at Abacus Business School, and it was a standard test. By standard, it was a mock, basically taking the same hours that the question would take in your exam. So in your exam, question one in section A will be compulsory. By compulsory, it means that it must be attempted by all students. Section B will have 3 questions and you'll have to choose 2. So, before I go very far, what should be your plan of attack of this examination? Remember, you have 15 minutes of reading. In those 15 minutes, you are not allowed to write or to start writing the exam. But this is supposed to be planning time. Now, how you use your planning time? 1 will determine if you're going to pass this exam or not. Number 2 will either give you an advantage over the rest of the people if you use this time well. So as you can see, the exam is 3 hours and 15 minutes. So the 15 minutes is planning time. How do I propose you approach this exam? Once you're given your question script, again, before we even go to the question script, be sure to arrive at the examination place at least 1 hour before. If you're like me, when I was still a student, I used to have those specific things I used to do for the exam. Things like going through my summaries and all that. If you have that long process as an individual, make sure that be at the venue 1 hour before. Do whatever you want to do in the car, in the parking. The venues usually have enough parking. Sit in your car, do it for 30 minutes. Now, 45 minutes before the start of the exam, make sure you're on the line to enter the exam. Why? You could get there and you have forgotten your exam permit at home. Do you know how disorganizing that can be? But the CPA usually has options. They have options. They usually set up an administrative unit to solve all these problems. Things like I don't have an ID and all that. But sometimes this takes time. So that's why you want to be at the examination hall, 45, not venue, hall, 45 minutes before. Such that in case there's any challenge, you can be helped. The ICPA team is always very supportive in this, but on condition that you're there on time. Okay, 30 minutes to the start of the exam, you should be seated in the room. Why? Such that you have enough time to meditate. You have enough time to put yourself in an examinable position. You have enough time to say a prayer. You see, you have enough time to say a prayer before the exam. You have enough time to relax your body, relax yourself. All these are very important. You have enough time to put off all the sweat, to place your pens in the right position, to place your calculator. Don't forget to go with the calculator, please. Your calculator in the right places. So in this time, they're also giving out scripts. Now, once you get your script, read the first page very carefully so that you don't make mistakes. Once you're done with reading, I propose that now that you know section A is compulsory, please run to section B and use your reading time. And you forgive me here for this particular test. All the questions were compulsory, but in your exam, there'll be 3 questions and you'll have to choose 2. So go to section B. Read all the 3 questions in section B. Don't rush in making a choice. Sometimes you get excited because just before you enter the exam, there's something you are reading and all of a sudden, wow, you're seeing it's part A of a section B number. And you choose it very fast because it has 10 marks. You forget that part B has 15 marks and if I don't score any of them. There could be other questions where you definitely probably lose less marks, but because you're excited by recentism, you rush to choose that question immediately. And midway after writing, you realize that, oh, actually I could have performed better if I'd done the other question, but you've already spent a lot of time. And remember, this is going to be a very time-pressured exam. You just don't have any chance to make those kind of kindergarten mistakes of making the wrong choices. So what do we do? Spend your 15 minutes reading through all the 3 questions in section B. After you've read through all the questions, make a choice. Make a choice. And when you're making a choice, ask yourself, of these questions, which one can I score highest marks? Think about where can you score highest marks. Think also where you lose the least marks. So it's just not going to be about what you know, but also what you don't know. So out of 3, after you've chosen your 2 questions, again, read through the 2 questions and say, which one is my best question? Once you're done choosing your best question, you have your 2 questions and also you have your best. Now, start constructing the answer for your best question. And about that time, it's almost time for you to start writing. The 15 minutes are probably about to get done. So the examiner says start. Don't go again. Start reading question 1. No. Continue with your best question because you already have the momentum. You're already running. You've already started constructing your answer. So go on and finish constructing your answer and also write it out for your best question. This is our question where our expectation is 25 marks because it's our best question. That is what you're working for. Now, when you're done answering this question, now, because you had more time on this, some of the planning time went to this. you must save some time on this question. You're not going to use all the 45 minutes for this question. You must use maximum at least 35 minutes on this question. Because we expect that it's free-flowing. It's your best question, you're free-flowing. But don't get excited and write too much to the point of losing time. You cannot lose your time on your best question. There are going to be harder questions that will require more time. Session A is very demanding. So, once you're done with your best question, remember there's a 50 marks that you have to defend in section A. So what do? Immediately, you run to section A. You immediately run to section A. Sorry, I'll need to change my... Wow, okay, this was the problem. So we're now in section A. Why must we go to section A? Remember, there are 50 marks. Out of these 50 marks, if you don't get 35 marks, I promise you it's going to be very hard for you to pass this exam. Because these 35 marks are critical, you now have to run section A. And as you do your section A, you must be very, very, very meticulous on time. And you must make sure you don't leave any question unanswered. What do I mean? Even where you don't know, be creative. Be creative. It's unlikely that you're going to enter an audit exam and you know everything. But your ability to pass will be determined by two things. How much you know and you've written, and where you don't know, how much you give away. Because remember, whatever you know, probably what you think you know, you're going to lose about 50% of the marks. Now, where you don't know, you cannot give away all the marks. Why? Because if there's any misfiring, you're already below 50. So, I repeat, your passing of this exam will be determined by two things. How much you know, how you go about what you know, and how ruthless you are at creating in situations where you don't know. Why? In situations where you don't know, you must be able to pick up at least more than 50% of the marks. And the only way you can pick up more than 50% of the marks, if for instance the examiner asked you, what's the importance of audit planning? Even if you didn't read audit planning as a topic, and someone asks you, what's the importance of audit planning? As a CPA student, you must be creative enough to know, okay, I didn't read audit planning. However, do I know the importance of planning? If yes, if they've asked for five points, make sure you create 5 reasons to why there's planning. And of those 5, I promise you, at least 3 will be correct. And if every situation where you don't know, you're stealing more than 50% of the marks, and where you know, you are assuming that you're taking all, then there's no chance you'll not make it in this exam. Even if you answered whatever you knew and left blank whatever you didn't know, be sure you'll not make it in the 50 marker. You don't make a 50 mark in this exam. I speak this with a lot of experience, and I'm telling you, your mark will be determined by how ruthless you are in situations where you don't know, and how very smart you are in situations where you know. So you have to handle both situations. So we're saying section A, your target is 50 marks, 35 marks. Remember, your examiner and CP has been very, very particular in question requirements. So a key point in attempting this exam is on question requirements. Your approach, question requirements. So, whereas I've said that you'll be starting with section B, that is about the approach. Now, for this particular session, I just want to take you on how to go about the risk questions. And particularly, I want to start with a question where your examiner is asking you about analytical procedures. And that's what we did in our test here. I'll give you the approach. Be careful. Sometimes your examiner is going to bring you very long scenarios. You must be strategic about them because remember, this exam is going to be very time pressured. Okay, let's start. Assuming this was your question, you can see that this question 1 alone is taking about 10 pages. Wow, about 8 pages. So in an examination setting, how do we go about this kind of scenario? Allow me to wrap this so that we're not confused by the too much writing on this board. Again, So how do we go about this? When a scenario is too long, always start by looking for the word required. You see, this question, I did it intentionally. It was a bit mixed up such that only a student who is ready can be able to tell, to go about it. Now, look for the required. You can see the required is in the middle of that. It's actually at the beginning, required. So the required is telling us to respond to the instructions in the email from the audit engagement partner. When you see this kind of question in audit, it means that you must look for you've not yet gotten the question. You still have to look for the email because that's where the real questions are. And this looks like an email. So we got the email. Okay, so this email is from the audit engagement partner to the audit manager. And these are the questions the examiner is asking for. Hello, I have provided you with some information in the form of a number of exhibits, which you use in planning the audit of age group. I held a meeting yesterday with the group finance director and a representative from the group audit management committee, and we discussed a number of issues which will impact on the audit planning. Using the information provided, I require you to prepare briefing notes for my use in which you, number 1, evaluate the audit risks to be considered in planning the group. You should use analytical procedures to assist you in identifying the audit risks. You are not required to consider audit risks straight into disclosure, as these will be planned for in the audit process. 24 marks. Part 2, design the principal audit procedures to be used in the audit of goodwill arising on the acquisition of X company. Management's calculation of goodwill is shown in Exhibit 4. You do not need to consider procedures relating to impairment testing or foreign currency retranslation, as these will be planned later in the audit. So, dear friends, when you read the questions, remember, this is going to be slightly different. In your earlier studies, you used to do it in such a manner that you read through the first time, and then the second time you're reading, that's when you answer the questions. Now, it's not going to be possible for you to do that. If you actually try to do that, you're going to be caught by time. So, you have to start with a question. Clearly understand the question you're reading. Understand the requirements. After you have understood the requirements, the first time you're reading, you're supposed to be answering question A. You're supposed to be building your answer for question B, A. The second time, you're supposed to be building your answer for question B. The third time, question C. That's the only way you do it without being caught by time. So from what we have read, it's clear that the examiner wants us to, first of all, provide audit risks, but also the examiner said you should use analytical procedures. Now, when the examiner tells you should use analytical procedures, it means there will be at least 5 marks of the computations, because analytical procedures comes from the word analytics. And every time you hear the word analytics, it means you have to analyze. Analyzing means that you have to go and look at the figures. Now, one of the easy, one of the easy tools, techniques you're going to use in analytical procedures is the ratio analysis. You can compute some ratios. There are other techniques you can use, like trend analysis, comparison with industry figures. All these can be used. But of course, the most easiest will be ratio analysis, computing some ratio. So by the time you go to the exam, it means that if you've done some good practice, you must have some ratios that you've kept on the side, knowing that these are the common ones that I expect to come, that I've prepared for. Otherwise, there's just not going to be enough time for you to just be thinking from first principles in the exam. Remember, an examination tests just not on knowledge, but also on time. If examinations were done for weeks and weeks, everyone would pass, right? But the fact that you're in limited time, it means the time is part of the examination, and it's one of the biggest reasons why people don't make it in this exam. So don't be fooled that people fail audit just because of the technical knowledge. No. Many also fail because of time. So please be careful. Okay, so let's move. So we now know that the examiner wants us to do audit procedures and analytical procedures. I'll not, because of time, I won't do the entire question, but I'll get you moving. So now that we know the requirements, we now have to go and read. So you're a manager in, but remember, as you read the question also, it's important to understand the format, because the format is very important, as it has the professional marks. So what is the requirement here? The examiner has told us, I require you to prepare briefing notes for my use, in which you evaluate the audit risks to be considered in planning. Now, every time your examiner asks you for briefing notes, it means this is what you're going to do. Okay. So you say to, from, subject. I'll make this bigger. I'll make this bigger. Subject. Date. And then you must have an introduction. Okay, so what is to who? Of course, the person who wrote to you is the person you're writing back to. So you say to the engagement partner. You go group. From audit manager. Date. Please put the examination date, unless if the examiner specifically stated that today is this particular date. That's not the case here. So in that case, today is, I'll look around and see, today, okay, assuming that today is 30th November. Okay. Subject, audit planning for Igbo. year ended. Always tell us the year ended. 31st December 2018. Introduction. As requested, below we highlight the audit risks and the risks of audit risks, and some audit procedures, colleagues, company, goodwill. Your details. Okay. We have also so what is the key thing about this structure of mine? My introduction paraphrases the questions the examiner has asked for. But I still don't forget that this is just not an examination, but it is a professional paper, and therefore we expect you to be writing an email, briefing notes. So we have not keep the introduction maximum 2 sentences. What's the common mistake people make? They come in the introduction and reproduce all the questions. You're not going to spend 30 minutes here trying to reproduce all the questions. No. Remember, the marks are on the format. So the format must show that you know what briefing notes are, but you don't get to spend 30 minutes here. So you have to keep it as short as possible, but professional. Okay, so after that, you say now, A, tell us analytical procedures. See, analytical procedures. Then you come here and tell us, come here now. In an ideal situation, computations would have been done in what you call the appendix. But in the examination scenario, it may not be possible for you to get another paper, do appendix and all that. So you're just going to put your analytical procedures here. When you're computing your ratios, you're going to use both. You have to do it for both years for you to be able to get the marks. And remember, every ratio you talk about, you write about here, you must talk about it. So I'll now be a bit quick here. So, ladies and gentlemen, assuming that these are the ratios that we have chosen to bring out. So these are analytical procedures. You can even say selected analytical procedures. So now, this we've gotten from our information here. From the information that was provided here. Now, once that is done, before you can write about these ratios, you now have to read through the scenario. Because for us to analyze this well, we must have information in the scenario. Now, this is when now we start reading the scenario from the beginning. You are a manager in the audit company, a firm of chartered certified accountant. Your firm is appointed to audit the parent company and also with the exception of Ring's company, a newly acquired subsidiary. When you see this kind of information, it's good that you highlight it. A newly acquired subsidiary. Remember, in a foreign country, there is foreign exchange risk there. Newly acquired subsidiary. So when you see someone telling you it's a newly acquired subsidiary, it means that there's a possibility of a risk of a media acquisition. You know, media acquisitions, the standards require that we must do some proration at consolidation. So there's one risk there that probably we are expecting. So probably in the exam, this is what you do. You say media acquisition, that's risk number one. Media acquisition. Then here you can say forex risk. We already have two risks. Okay, you see, we are doing well. But before we go very far, when you see a question of this nature, something I'd forgotten, always try to estimate how much you have to write. These are 24 marks. You have to ask yourself, how am I going to earn the 24 marks? Because that's analytical procedures, we are not making the marking guide, but we must come up with a way of how we think we're going to earn the marks, so that we're not shooting in blanks, you know. So 24 marks, our assumption is that, oh, maybe the examiner has given 5 marks for the analytical procedures, then probably, so it will remain with about 19 marks, and these 19 marks, now that is the risks. So tentatively, it means that we must have at least a minimum of 8 to 9 well-written out risks. Well-written out risks. Okay, so we have to assuming that each audit risk, usually assume that each audit risks is going to take at least 2 marks, at least 2 marks. We know there are situations where the examiner will actually give more than 2, but you don't know where which situations those are because you don't have the marking guide here, right? So assume that each audit risk could take at least 2 marks. So it means that it's okay for you not to raise 9, but at least you must raise a minimum of 8. And I'll tell you why it's okay for you not to raise 9. Most likely some of these points are going to get about 3 marks, but we don't know that. It could take a maximum of 2. They could give you marks for computing materiality, but we are not in the marking room to know what the examining team has decided. So for us, we have to do the bare minimum. That's why this paper is particularly challenging. It has a lot of variables. It has a lot of variables because the marking guide has not been produced to you as students. So, but you must presume, otherwise, you don't get to write 15 points and hope to finish this exam. No. But also, the examiner has been so good in the past. The examiners have been so good. They've not had situations where they've required you to write more than 10 or even 8 points. So, and that's what I'm saying. If you can come up with 8 or 9, I think you're in a very comfortable position. In my view, 9 is a bit quite high, but 8 is okay. But don't go beyond 9. 9 is an overshoot, right? Maximum, keep it within 8, right? Because we know there's some things that are going to probably, they might give you some marks for materiality, computing materiality, or they could even give some more marks for risks of material misstatements. Okay, so perfect. So Now, we are right away looking for our risks. Out of our 8, we already have Forex risks, retranslation risk, and media acquisition. So we are now looking for another 7. I think we're doing well. So let's continue. We're still reading. All group companies report using IFRS standards as the applicable financial reporting framework and have the same financial year end. You're provided with the following excerpts: an email which you received from Maya Craig, the audit partner, background information about the group, including a request from the group finance person, then extracts from the group finance financial statements projects projected 31st December, and comparatives extracted from the management accounts and accompanying explanatory notes. Management's determination of the goodwill arising from acquisition of Link's company. You remember our newly acquired company, and then an extract of the audit strategy document prepared by Vulture Associates. You remember Patsy was asking us about this strategy, so I think that's why an examiner is giving us this. Okay. Now, we have already read this, so we don't have to read it again. But since it's the question, you may in the exam read it again, but today we'll not read it again. Okay, so next is background information about the group and request from the group finance director. The group is a listed entity. Now, always highlight when you see listed entity, you must highlight this. Why? There are some specific standards that are compulsory for listed entities. So instead of examiner asking for talking about listed entities, in your mind, just know that either examiner is going to maybe planning to bring issues to do with earnings per share, IAS 33, or segmental reporting, which is IFRS 8, operating segments, because those two are compulsory for listed entities. So always put that across. Okay. So it's a listed which operates in a distribution, supply chain, and logistics management. Its operations are worldwide, spanning more than 200 countries. If we had not raised the issue of foreign exchange risk, this again would be a trigger for you to think that there's that risk. But we've already seen it, so it's okay. So the group's strategy is to strengthen its market share and grow revenue in a sustainable manner by expansion into emerging markets. There are over 50 subsidiaries in the group, many of which are international. There are 3 main business divisions: post and parcel delivery, commercial freight and supply chain management, each of which historically have provided approximately 1/3 of the group's revenue. Again, do you see what the examiner is building? As you read, you must know. This, of course, brings us the risk of segmental reporting, operating segments. That's another risk. Operating segments. That's why the examiner is telling you that each of them has always brought 1/3 of the group's revenue. Operating segments, third risk. The fourth business division focuses purely on providing distribution channels for the oil, coal sector, established 2 years ago, and 2018 began to grow quite rapidly. It's forecast to provide 12% of group revenue this year, growing to 15% in 2009. Again, why is the examiner giving you 12 and 15? He wants you to remember about the 10% rule in operating segments. Okay. In recent years, revenue has grown rapidly, based mainly on growth in some locations where e-commerce is rapidly developing. This year, the revenue is projected to decline slightly, which the group attributes to increased competition. As the new distribution company has taken some of the group's market share in a number of countries, however, the group's management team is confident this is a short-term drop in revenue and forecast return in 2009. So the examiner talks about innovation there and saying that the group has invested in automating its well, and while it still employs more than 250,000 staff, many manual jobs are now performed by robots. Approximately 5,000 staff were made redundant early in this financial year due to automation of their work. Other innovations include increased use of automated loading and unloading of vehicles and all that. Again, so which other risks do we see here? Provision for redundancy. Okay, let's continue. Okay, this is integrated reporting. You could read through in your time. I'm trying to save time here so that we don't keep this very long. Now, one of the reasons why the examiner will give you, one of the key reasons the examiner gives you notes is for you to be able to see risks. So for now, just assume that almost every note will have a risk there. So goodwill. So before you read through notes, you must see a note is attached to which particular item. One. So goodwill. So that's note number one. I'm saying that goodwill relates to group subsidiaries and stated for payment on an annual basis. Management will conduct an annual review in December, but it is anticipated that no impairment will need to be recognized this year due to anticipated growth in revenue, which is forecast for the next 2 years. Now, always be careful about this kind of rhetoric writing. The examiner himself has told you that the goodwill relates to goodwill and is tested for payment annually. So why then would someone come and say that this year we don't expect? So that in itself is a risk, right? Because the examiner is now telling you that management will conduct the annual impairment in December, but it is anticipated. So they're already biased. And that's where now the risk is. So there's a risk that goodwill may be overstated. Remember, we're developing our risks. Okay. Now, they're telling us in March, the group acquired 80% of controlling a listed company in a foreign country. Okay. March, every time the examiner gives you a date, compare it with your year end. Are we together? So our year end is December. So this is a media acquisition. It's a risk that we already saw. Media acquisition. Okay, so let's run. Intangible assets. So now, intangible assets. So other intangible assets is mostly software and other technological development costs during the year. That 5 million was spent on developing of new IT systems for dealing with customer inquiries, a further 20. Every time the examiner gives you figures, always question these figures. It means there's a risk coming with these figures. Okay, so the examiner is telling you that 5 million developing new accounting software, these costs have been capitalized as intangible assets, are all being amortized over 15-year useful life. So we will go through this. Because of time, I'll just write out some risks that we are able to pick out such that we don't lose time. So we said first, we start by writing about these particular analytical procedures that we did. Always do that, because if you don't, you're going to forget. And you will not get marks if you don't tell us the risks associated with these analytical procedures. You will have wasted your time. Okay, so what are the analytical procedures telling us? One, operating profit margins is increasing. We usually expect it to remain the same. Return on capital employed is increasing. Okay, interesting. However, what's happening to our revenue? Let's see what's happening to our revenue. So our revenue on both occasions is doing what? Our revenue is falling from 599 to 577. So it means that you're going to tell the examiner that operating profit margin The operating profit margin has increased by from 4.5% to 6.1%, despite a fall in revenue. The return on capital employed has also increased from 10% to 12.1%, despite a fall in revenue. Therefore, there's a risk that the operating expenses may be understated. That we've just done an analytical procedure. Look at this, effective tax. Overstatement. The effective tax rate has increased, reduced from 25% to 19%. There is a risk that the tax charge may be understated since there was no change in the tax law. So we explained to the examiner that we have analyzed your effective tax rate is going down, and yet there's nothing changed that has changed in the tax law. So for us, when we see changing, it means that there's a possibility that you have understated this tax charge. And that's why we are raising it as a risk. Okay, let's see what else we could come up with. Going concern. The current ratio has fallen from 2.4 to 2.6, from 2.6 to 2.4. To 2.4. This is an indicator the gearing this is an indicator that the company will be facing liquidity challenges. The interest cover has also fallen. Sorry. The gearing has also increased. From 9% to 24.5%. This is an indicator that the company these are all indicators of uncertainty regarding going concern. IS1 presentation. Where is that? Where company has uncertainties regarding going concern, these must be disclosed in the notes to the financial statements. Therefore, there is a risk. Financial statements will not be. The risk financial statements will be misstated. The result not disclosing these. Therefore, the overall financial statements are stated, maybe stated. So I'll stop here, but at least you can see we've talked about interest effective tax, we've talked about gearing, we've talked about current ratio, we've talked about return on capital employed, we've talked about operating profit margin. So we could have even talked about okay. Really? Okay. So let's look at this. So this is what we call analytical procedures. Now, we have to go on and get other risks. Now, again, this is a trick. These are also actually risks, which will also be scored marks. And that's why you don't have to worry too much about, usually when a question of risks comes, usually there are quite a lot of marks that will be given in a question of analytical procedures. So you're already 3 risks up. Okay, so let's go on to other ordinaries. Just to remind you, every time you ask for audit risks, stroke risks of material misstatements, always follow the following steps. Step number 1, what is the risk? Tell us, identify the risk. Here we're saying, use a title, stroke heading. Step number 2, material or not. Where you have figures. Step number 3, you must tell us evidence from the scenario. Step number 4, accounting statements, criteria. What is the criteria for you to say that, okay, sorry, before this, you have to tell us what is the risk, state the risk. State the risk. Then step number 5, criteria. What's your criteria for telling us that this is a risk? It could be an accounting standard. Tell it to us. And then step number 5, impact on the financial statements. Step number 6. So I'm just going for, because of time, I've just write out for you 2 good risks, such that now you can copy on how I've written them and use that to explain other risks. Okay, so these are the steps that we must take. So let me go and choose one of the risks that we already identified and explain it out so well to earn the marks. Okay, where are our risks? We're here. So one of the risks we had was goodwill. So, and the other was the media acquisition of Links Company. So we shall come here and say, media acquisition of Links Company. See, that is our risk, media acquisition of Links Company. Then you tell the examiner, we've identified the risk. That's us identifying the risk. Then you tell the examiner that in March 2018, a new company called Links was acquired. Now, question is this Links anywhere in our books for us to compute materiality? Is Links Company anywhere in our books? Okay, so links is a bit tricky. Why? It is affecting all our, this particular point is affecting our entire income statement. So we may not be able to compute materiality on this particular point. It happens. And that's why not all the time we'll be able to compute materiality. Now, a new company called Dix was acquired, right? So what is the risk? There's a risk that the financial statements IFRS 3, business combinations, requires that where there is a media acquisition, sorry, IFRS 10 consolidation, you see, next, overstatement of intangible assets. Overstatement of intangible assets. So let's go back and see what happened with our intangible assets. What happened with our intangible assets? So now, one, when you our intangible assets, we have to first find out, are they material or not? So it means we have 200 over 3492, 200 over 3492 to see whether they are material or not. $200 over 3492. Okay. That's 6%. Or is round off to one decimal place, 5.7. So you tell the examiner that at 5.7% of total assets, fixed assets, the intangible assets are material to the statement of financial position. So you've talked about materiality. Then the next stage, what is the evidence from the scenario? I'm going to tell the examiner, we go back here and say, okay, what's our problem here with this person? He told us the 35 treatment was spent on research and development of robots being used in warehouses. $20 million has been spent relating to intangible assets was spent on robots. It was spent on robots for research and development, expenditure. There is a risk that intangible assets may be overstated as a result of including non-qualifying expenses. IS 38, intangible assets, prohibits the initial capitalization, of initial research costs. Therefore, expenses may be understated and intangible assets overstated. Remember our procedure, our steps: identify the risk, material or not, evidence from the scenario. What is the risk? What's the accounting standard? What's the impact on the financial statements? So I'll definitely not do the entire question, but you can see we have at least 1, 2, 3, 4, 5 risks. We're not doing badly. But to remind you, when faced with such a question, you have to know how many risks must I give. So again, to start from the beginning, how do we attack the question? Go and read through the requirement of the question. Read through the requirement of the question, required. If there are no questions in the required, go to the email in case there's an email, in case it's there. But the examiner has been very good to you in the recent past. The questions are always at the end of the question. So just go to the end of the question, unless she or he changes is sitting. But they're always at the end. Look at the question. Step number 2, look at the format. Why must we get the format? Because there are professional marks in having the format. So that reminds me, whereas we've not finished this question, at the end of it all, you must put a conclusion. And the conclusion can be as simple as the issues discussed above should be considered during audit planning. For you to get the professional marks, you must have that format and the conclusion. Don't forget about it, dear friends. So, to remind you again, so start by looking at what is required of me. Then, after knowing all the question requirements, go and reread the first question. Concentrate on it as you're reading the first time. The same way we're coming up with the risks, operating segments, provision for redundancy. We've not written out all the risks, but we identified them. Then, remember, analytical procedures. If the examiner has asked you for analytical procedures, you must start with those. And we did this very well here. And after doing our analytical procedures, you see our format, our analytical procedures, then we went on to give other risks. And then we're giving other risks, you said, you must tell us what you're doing. I mean, identify the risk to your own knowledge, evidence from the scenario, state the risk criteria, and impact on the financial statements. Now, dear friends, I know most of these things, I've actually given them to you in my brief, in my tips that you need to look at before the examination. So, those of you who did the mock, this is how you needed to go about this and until the end. So, very key to this, again, to remind you, sometimes these questions will be long. The plan of attack is important. Start with the questions. Find out what is required from you. Then attack. When you're required to give analytical procedures, please remember, the notes that are given usually will have a lot of risks. All these, we didn't finish them, but all these had risks in there, a lot of them. And if anything, most of the risks will be here. So as you read through each note, be sure that there's a risk. Now, when you read a specific standard, a specific note, and you don't see the risk, or the standard is complicated, don't waste time there. Go to the next. Remember, the risks will not be exactly the exact number we need. The risk will be much more than the number you need. So that's it about the question about risks with analytical procedures. And specifically, we were looking at the question that you did in your mock. So I do hope that this has helped you make easy these particular questions, specifically for those of you who did the mock. Those of you who didn't do the mock, you can still get the question and just get the approach from here. I've kept this very short because I know you have exams very soon. And right now, naturally, the body likes very short things. You want to read something and get the point straight away. And that is exactly what I've done. I've not done the entire question, but I have given you the approach so that you're able to go through this within 30 minutes and you're good. Other than that, you can always refer to your other recordings of our revision sessions that we did in class, our last session that we did in class. We have been able to do all these questions, and also this particular question, we did it in full in class. So you can always refer to those. Other than that, I want to wish you the very best in your exam. I know you'll do well if you've been following us very well in your classes, and specifically those who followed us very well in revision. I wish you the best, and may the Lord's blessing come upon you so that you do very well in your exams. I'm Judge Martin Mutumba, your tutor of audit practice at Matt Abacus Business School. Other than that, if you find this very useful material, if you find this very useful, please refer your friends to come and join us at Matt Abacus next sitting. Remember, we shall be starting with our audit practice classes in January, about 2 weeks after the exams have started. Other than that, you can always go on our website and find information about us. Thank you for coming. I want to wish you all the best. Cheers.